Have you ever noticed that before you enter a trade, you've already decided how the story ends? Maybe you're looking at your setup saying, yeah, this is definitely going to work. Or maybe you're staring at your chart saying, oh no, watch this be another loser. Or maybe you've reached a point where you just genuinely don't care and you say, hey, I don't know what's going to happen. Here's why all this matters. The mindset that you bring into a trade can determine whether you execute your plan with confidence, whether you sabotage yourself with fear, or whether you maintain the composure needed to survive long enough to become a consistently profitable trader. In fact, picking the wrong mental approach can slowly lead to hesitation, emotional decision-making, and eventually a blown account. But picking the right one, that could lead to a level of calmness and clarity that most traders spend years trying to find. So today we're going to break down the 3 most common mindsets that traders have before entering a trade, the pros and cons of each, and by the end, I'll tell you which one I currently use and why it completely changed the way I view trading. Let's dive in. Now, recently on the Trading Coach podcast, we talked about the difficulties of transitioning from demo trading to live trading. We discussed the biological changes that happen when real money gets involved and how many of those reactions are honestly outside of your control. Your heart rate increases, your stress levels rise, and your brain starts treating the market like a survival instinct. But today, I want to talk to you about something that is within your control, and that is your pre-trade mental routine. More specifically, the way you mentally approach each opportunity before clicking that buy or that sell button. Not too long ago, I posted a poll on our YouTube community page asking the simple question, what is your typical trading mindset going into a trade? The options were, I assume I'll win, I assume I'll lose, or I'll make no assumptions. And today we're going to explore all 3. So let's start with the first one. I assume I will win. About 29% of you guys, at least at the time of recording this, selected this option. And one trader commented this. He said, Akil, I assume it will win, otherwise I wouldn't take the trade. But I am prepared to lose, which is why I use a stop loss. There's a second comment that said, man, I'm always optimistic about my trades. I treat it like a train station along the road. I buy tickets at support and resistance zones. If the train goes past my zone, I know I'll just have to buy another ticket later. It's kind of like when I'm wrong, I'm just early. And when I'm right on time. So let's talk about the positives, right? The biggest one has got to be confidence, right? You cannot be a successful trader. I'm going to repeat this. You cannot be a successful trader without confidence. If you're consistently afraid to pull the trigger, you're going to spend your entire career watching opportunities pass you by. And if you can't enter trades, it's going to be very difficult to make money from the market. So confidence is necessary. But confidence can also be dangerous because confidence and ego are neighbors. Where confidence is trusting yourself, ego is needing to be right. Confidence says, yeah, I trust my process. Ego says, I need this trade to validate me. And when your identity as a trader becomes attached to being right, something subtle starts to happen. Your goal shifts. Instead of being focused on taking good trades, you start trying to prove yourself right. You start holding losers longer. You start ignoring those warning signs. You start justifying your mistakes. And before long, you're no longer trading your system. You're simply defending your ego. Now, I do love the first trader's comment because they added a very important piece. I'm prepared to lose. And that tells me they understand that confidence doesn't mean certainty. The market doesn't care how confident you are. We have zero control whether any individual trade wins or loses. We also know that our strategy doesn't have a 100% win rate. So realistically, why would we expect every trade to work? And that's why I like the second comment even more. The train ticket analogy for me shows that the trader understands the different probabilities. They're confident in their process, but not attached to any individual outcome. They're willing to keep buying tickets because they understand that edges play out over a series of trades and not just over a single one. And that's a very healthy way to look at the market. Now, let's move on to the second mindset. I assume I will lose. And about 21% of you guys chose this option. We had another comment that said, nah, man, I always assume it'll lose. That way, I'll be indifferent if it wins. And if I'm being honest, which I always should. That's a bad saying, because if we weren't being honest, we'd be lying. Anyway, this was my mindset for the majority of my trading career. In psychology, this is often called defensive planning, right? A defensive planner intentionally lowers the expectation so they can prepare for negative outcomes. For me, this mindset started in school, where I would consistently take tests and I'd feel really, really great about taking a test, and I'd get the grade back and it would be much worse than I thought, and I would get all sad. And I'd be more sad because I hyped myself up thinking I got like a perfect score. So what I did was I went to the exact opposite extreme. I would take a test and I'd be like, oh, I bet I got a D or an F. I bet I failed it. I did so bad. That way, if I did get that result, I was already mentally prepared for it. But if I got anything better, I was actually really excited. And from a trading perspective, I've always liked this approach as well, mainly because real life blends into trading life. They're kind of intertwined like all those different Marvel timelines. But for me, it felt similar to having my stop loss move to break even, right? If I lost, I wasn't really emotionally affected. I was already prepared for it. I already made peace with that possibility. And if I won, woo, great. It was a pleasant surprise. Like when that $20 bill that went missing 5 years ago suddenly appears in the laundry. Ooh, pretty good. So anyway, that sounds pretty good, right? Well, not exactly. When I looked into some research, right, performance outcomes between the optimistic planners and the defensive planners were actually pretty similar. But there are hidden costs to being defensive all the time. On the charts, constantly preparing for the worst can add stress to trading, which is an already stressful activity. And especially for newer traders who are still developing their confidence, this mindset can make it much harder to trust your analysis and execute your plan, especially during a losing streak. But the bigger issue happens away from the charts, because mindsets don't stay confined to trading. I've personally found that when you're constantly preparing for negative outcomes in trading, it can slowly leak into your everyday life, right? You start overthinking certain things, you start over preparing, you start over worrying about situations that haven't even happened yet. You become focused so much on avoiding the negatives that you kind of forget to pursue or enjoy the positives. And over time, it can be very mentally exhausting. Which brings us to our final option, and this is the one that received 50% of the votes. Make no assumptions. And interestingly enough, after years of being a defensive planner, this is where I find myself today. Now, as many of you guys know, I am a trading coach and I spend 4 days a week trading alongside students in a live environment. They see me during my hot streaks where everything works and I can't be stopped. They see me during my cold streaks where I just suck and everything I touch rots and burns, right? And if you ask them what is the biggest difference between Akil during these two periods, they'll probably tell you there isn't one. My demeanor pretty much stays the same. My approach pretty much stays the same. My routine pretty much stays the same. And people ask me, right, how do I stay so calm? And my response is this: because I just don't care. And I know that sounds terrible because I actually do care. I do a lot. This is my full-time gig and it feeds my family, so I obviously care. I've got 2 boys that are eating us out of house and home. They play travel soccer, which costs a lot of money. They have to eat dinner before and after practice, which is costing us a lot of money. I need trading to work or my kids will die. No pressure. So yeah, I care. I care a lot. But what I don't care about is the outcome of any individual trade. And that's an important distinction. Now, this idea is based off something called independent probabilities, right? And I know gambling examples make traders uncomfortable, but stick with me for a second. There are games with dependent probabilities and games with independent probabilities, right? Blackjack and poker, for example, are games with dependent probabilities, right? As cards are removed from the deck, the odds change. So the past influences the future. A coin flip is different. I don't have a coin on me, right? Roulette is different, right? Each event is independent, meaning a past event doesn't affect the future event. So what about trading? Well, for traders, at least most traders, the majority of traders, right? There are some strategies that can fall into the other category. It's going to be much closer to the independent probabilities, right? The trade that you're taking right now, doesn't know whether your previous trade won or lost, and the market doesn't really care. Your previous trade doesn't increase the odds of this next trade winning or losing. And this trade won't influence the one after that. Every opportunity simply represents another occurrence of your edge. Nothing more, nothing less. And when you truly understand that, something very interesting starts to happen. You stop feeling that need to predict right outcomes. You stop trying to force certainty into an uncertain environment. You simply execute. If the trade wins, cool. If the trade loses, cool. The only thing that matters is whether you followed your process or not. That's where the real consistency begins. So, if I had to leave you with one final thought, it would be this. The best mindset that you can have is understanding that you have no idea what's going to happen next. It doesn't mean that you can't be confident. It doesn't mean that you shouldn't prepare for adversity. It simply means accepting that the outcome is outside of your control. Your job isn't to predict with certainty. Your job is to execute your plan. And the market will handle the rest. And the moment you stop trying to control the result of each individual trade is often the moment trading becomes a whole lot easier. Trust me. Something else that will make your trading a whole lot easier, I know it did for me, was finding the right coach, finding the right mentor, and finding the right community. Luckily, we have all that available right on our platform. Just check out www.tier1trading.com. I recommend signing up for the 14-day risk-free trial membership. That way you can check out some courses, you can talk to our community, and you can hop into live sessions and see what we're about before making any type of commitment. So www.tier1trading.com. I look forward to seeing you there. And until next time, plan to trade, trade your plan. Take care.